Okay, guys, we're almost going to get on a scruffy rant. Definitely are. Let's roll the intro, and I'll tell you all about it.
Matron, take them away.
And a warm welcome to one and all. This is your first time here. This video might be a little bit odd. You're right, it is a trading channel, and I am big scruff with an over-obsession of coffee, which I need tonight because it is currently 25 past 11. So let me have a quick slurp, because I've been here since 6 o'clock this morning. Why? Because I justify everything I do to the Scruffy Squad, not necessarily to the public. I used to, up until recently, do a news announcement on a morning, and I used to get it in at 8 o'clock, and I would tell you what I was going to do in that video, and then I would do it throughout the day, because I believe in that. I think you should back up everything you say, and that's why I don't use rollback charts, and everything you see is in the moment.
Are you serious?
Anyway, that's just a little bit of background. And then you go through it and you'll see the Scruffy Squad. They see what I do before I do it. A lot of the time we do it the day before. And we have Zoom calls every day. Right? So I know I'm pretty good at what I do. Why? Because I've done it nearly 19 years. It was part of my job. And here we are. And it's now a full-time job. So why am I getting a bit tetchy tonight? Well, I'm not tetchy. I could have a royal rant. But I did a video the other day, and it was about fear and greed, and it came from you guys. And it's a little salute to sort of Ballylocks who sent it. You know, it was a great question. If you go through it, it's quite difficult for me to put into words, because mindset is the key to trading. And this rant is along them lines, because most of the time this industry is sold on fast cash, big money from little money, and the Lambos and all of this. And unfortunately, it creates a bad light, but it also attracts the wrong type of people. Now, I've worked my entire life, and it's well known I've got no time for freeloaders, none whatsoever. There's nothing wrong with having very little and building something up, but I mean just people that stick it in and just take all the time. But they're absolute failures. And they're the ones who normally shout the loudest because they've got zero intelligence. None, right? And they don't know what it's like to build a business. Now, I built mine from scratch. I had employees, lived a really good life. And when that business closed, I lost everything. Everything. But I never claimed a beam. You know, I broke my neck. Got nerve damage in this hand. You know, I never claimed a thing. I just adapted and overcame, because that's what you should do. And trading is the same. It's all about your mindset. So I'm going to show you a comment, and then I'm going to justify it. I shouldn't, but I will.
Because I have balls, and you don't.
All right, so let me just flick this over a second, and I'll come back to this in just a moment. So there's the video that I did, okay? Love of my life, Winky. We have a great life. Even though we lost everything, and we did, we just rolled our sleeves up, got ourselves back on our feet, never asked for a thing, never blamed anybody, we just got on with it, all right? And it's all about emotions and everything. And I play heavy on this because I do believe that if you succeed in trading, you're normally pretty good with your mindset, you're disciplined, you can do tasks, you're methodical. If you're coming in looking for the fast cash, as I was talking about, thinking that it's an easy system of X marks the spot and just show me the key, I'll be fine. No, you won't be fine. It takes work. But not only does it take work, it takes a lot of bloody money as well. You know, it takes money to make money. So anyway, so cut this through and I'll drop down into the comments. Now, as I come down, I was trading Nick there. It actually came from Giuseppe, not the comment I'm on about, but he mentioned something, and I'm going to give him a little salute because he's always there. You know, good kid. As I come down, sort of through the various comments, and I'll find it in just a tick, because it's not that far down. Oh, might be actually. Food, but there we are. Right. I would like to see you trade Euro JPY. Okay, fair comment. And then somebody's put underneath, the fact he doesn't should tell you something. Tell you what? Please explain that. I don't trade it because I don't know how. Oh, I'm scared of it. No, it's just not on my radar. But if you'd actually done some homework and thought about this, and I just pull up, say, my YouTube channel, well, what do we know? Euro JPY. Euro JPY. Euro JPY. Euro JPY. Euro JPY. Euro JPY. There's loads of Euro JPY that I've taken. Loads of them. But I'm going to go back to that screenshot. Well, it's not a screenshot, it's actually my broker. You don't see it on here. It's not on my radar. It's not a product I look at day in, day out. These are my core products that I understand and I trade. But when the guys in the squad ask me, will you look at it? I will. Now, sometimes it comes up on another radar that I use. Now, if I pull up sort of my broker, like another broker, just so that you can kind of see, let me just pull this into shot. Pull this one down. There's that same window of the world, again, on my other broker, because I look at the same products over and over. Then when I go to market, I use this, which is a strength sheet. The Euro JPY is there, but it doesn't come up as often as you think. My core products are here. Cable, Eurodollar, gold, oil, DAX. If you're going to be good at something, you specialize and you drill in. Now, you always see me trade cable. You always see me trade Eurodollar. You see me trade the DAX a lot, and you see me trade oil a lot. Why? Because I'm used to them. It's my bread and butter. I don't need to trade Euro JPY. So when you see flipping comments like that, oh, doesn't it tell you something? Yeah, I'll tell you exactly what it means. It means I'm careful with what I trade. I understand what I trade, and I don't take risks. Now, isn't that common sense? And that's what I'm driving at with this little video tonight. And I wanted to highlight that because it's very easy to throw mud and it's very easy to chuck stones, but be careful if you're in a glass house because you might get cut. That works the same way with the charts. You go into a chart that you're unfamiliar with, it's going to burn you, you know. But can I trade it? Of course I can. Trade it loads of times. Do I like trading it? Doesn't bother me one way or the other. It just hasn't been on my radar. The last time I traded it was 2 weeks ago. So I'm not rightly sure what you're driving at. I genuinely don't. But that tells me something. There's no homework done. So you made an assumption. An assumption, as we know, is the mother of all ups.
You know, you're a classic example of the inverse ratio between the size of the mouth and the size of the brain.
And that's probably why traders fail, because they assume they're seeing something in the chart without actually doing the homework side of it. You talk to the guys in the squad, and even the guys in the squad sometimes struggle with this, but I'm trying to bash it out of them. They'll see me look at a chart. I'll spend 20 minutes just marking a chart up. I'm not even reading it at this point. I'm just marking it up. So I've got the levels in perfect. I spend time putting fibs in. Why? So that I know the exact drive point. I know the pressure point. Then I'll overlay some indicators. I use 3. You know, and it doesn't matter what 3 you use, but I use 3 because I work on a principle of 2 out of 3 ain't bad. Then I look at 3 baskets. I look at a monthly, a weekly, a daily, and I get an overview of what's going on. Then I look at a daily, 4 hour and an hour, and I'll get an overview of what's going on there, and I'll see if there's a synergy between the two. Then I'll look at an hour, a 15 and a 5, and I'll see if there's a synergy there across all 3 baskets. And this can take quite a while. So when I go to market, I've almost got it nailed, you know, because I've spent quite a bit of time doing it. Now, if you bear with me a second, I'll be able to pull something up. Just
Well, we're waiting.
okay, guys, found it. So I'll just pull this over. This is my dashboard from Darwin. This started 31st of December. Once I got through the allocation, because you got to go in, you got to put 20 odd trades on before that just to create a Darwin. But it started going on the Darwin 31st of December. Now this has to achieve a score rating of 75 to be funded. I've already done it. So this is a funded account now. 76.25. The seed allocation will go in a few days' time, 25k. And I'll show you that in just a second. The ranking, that they have something like 40,000 customers and 4,800 of them are ranked on these screens. In the first month, I've ranked in the top 500, so I'm quite pleased with that. You know, it's not bad going from a standing start. If we look at the assets that I've taken, the CFDs index or the DAX, etc., took 58 trades, 91% hit rate. If I put it into the Forex, it's 182 trades, 96% hit rate. These can't be fudged. These figures are set in stone. Now, if we pull this down slightly, you'll start seeing current return. I've got it up again today. You know, it's now at 546. Hit the rating calculator, and there you go. That is what I'm going to be funded with, 25k. So why show that? Well, it's kind of justified from a third party that I do go to market and I do put my money where my mouth is. And I can't be any fairer than that. At least I don't think I can. So when you're coming into this, and I do talk heavily about homework and things like that, everything I do is homework. The clicking of the mouse is the last part of the job. But most of you think it's the first part. It's not. I know what my risks are. I know what my profit targets are. I know what products I'm going to be trading. And that's the crux of it. I don't do anything willy-nilly. I plan it. And then that's why I'm reasonably successful at this. So, not really sure where to go or end this one. I think ultimately it comes down to, if you want to be a trader, you've got to put the work in. But if you can't do it, go do something else. Go sell something on eBay or something like that. Because trading is not for everybody. And what I find with this is, it's one of those jobs that everybody thinks they can do it. Everybody's got an opinion on it, but there's not many can do it. And the sad reality is, nearly all of you could. You could nearly all do it if you were prepared to put the work in. But that's the difference between somebody that runs a business and somebody that doesn't. You know, you'll always have the guys that work on the shop floor and will never be promoted because they've just got a loud mouth. But the reason they've got a loud mouth is because a lot of the time they're not very good at their job. And that's why they are kicking out. Trading's very similar. It attracts that kind of attitude, shall we call it. But if I was going to give you some advice, it's step back. Trade once or twice a day only. That's all I do. I trade once or twice a day, but I break my trades up. You know, so I might trade 10 trades, or it looks like 10 trades. It's not. It's 2 trades broken by 5 on each one of them. Okay? But trade twice. Ask yourself one question before you go to market. Can I afford this? And if you say yes, because you can see where your stop is, and you know how much it's going to cost, then you're at peace with the market. So you make a rational choice. But if you can't answer that question, can I afford this? It's for 2 reasons. One, your position size is way too big to where the stop is, because you can't move the stop. The stop has to stay where it's at. Or you haven't got a stop in the first place and you don't know how much it costs, which is stupid. So that's my advice to you. Ask, can I afford this? And it'll sort a lot of things out for you. Put your stop in. You know, hide it behind a level in a swing high or a top of a Bollinger Band, something like that. Put your stop there. You know roughly where you're getting in so you can see the distance. If it's 40 pips and you're a pound a pip, it's 40 quid. Well, if you've only got an account, that's 200. It's too much. So you say, oh, I can't. So half it, right? 50p. Well, it's now 20 quid. Can you do £20 on your £200 account? It's a bit high, it's 10%. I don't know if I want to do that. So you're left with 2 choices. You either half it again, 5p, and see what that is. And you'd keep halving it till you're comfortable with the price, or you just don't trade it in the first place. That's the best advice I can give you. Because if you're at peace going to market, you make rational choices. And then you'll find that you become better at this. And I'll guarantee 3 ain't a charm in trading. You go once to the market, do well. Go twice to the market, might just say got away with it. 3rd time, because you're on the crest of a wave, you'll catch the rotation in the market and it'll take it off you. Less is more. Best advice I can give you. So anyway, a little bit of a late night rant. I'm going to have my coffee, get back to it at 6 o'clock tomorrow morning. And happy days. And you never know. I might actually trade the Euro JPY just for the sheer hell of it. But I'll only do it if the odds are in my favour. So as always, guys, trade well, keep your risk managed, but above all, do what you love, then the money will follow. See you all in the next one.